Good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Thursday, July 26, 2018. I am your host, Dan Russo, the chief market strategist at Chaikin Analytics. You can follow me on Twitter at DanRusso_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. So another strong day in the markets yesterday as the S&P 500 just continues to grind higher, now within 1% of the all-time highs. Technology and industrials led, while telecom was the big underperformer on the back of AT&T's earnings weakness. In a continuation of the recent trend, though, small caps lagged on the day. We'll touch on that a little bit further in the call today. Treasuries were narrowly mixed, with the curve flattening further. The dollar was weaker against the major crosses. Gold finished up about 50 basis points, and WTI crude, something we highlighted earlier in the week, was up over 1%, though off the best levels of the day after the U.S. inventory data came out. Breadth on the New York Stock Exchange was positive 1.7 to 1, and breadth on the NASDAQ was positive 1.3 to 1. But the big story was after the close, with Facebook's earnings disappointing investors. Stock trading down about 18% this morning. That's going to weigh on the technology sector today. Futures are down a bit on the S&P, down much larger on the NASDAQ, as you would expect. Asian markets, though, they were mixed overnight. China underperformed for a second day. European markets are seeing some strong gains this morning. Treasuries are weaker. Gold is off small, and crude is little changed. So we'll dive right in here and look at the main levels as we always do. And we're trading near the highs. As I said, we're now less than 1% from the January all-time highs. Support does come into play at 2,800, then 2,771, 2,741. The 200-day moving average is at 2,692. Took a lot of the lines out of the chart. Didn't want to make it hard to read. Resistance does come into play here at this 2840, 2850 level. So we are trading into an unfilled gap, which which is actually in the process of being filled. We'll see how that plays out. And then the all-time highs are at 2873. RSI, again, even with the strong move higher, did not become overbought. Came close. 69.70, but we want to see a thrust move. Again, we want to see a strong move higher in the RSI to indicate to us that momentum is in fact confirming price action. Chaikin money flow indicator is still bullish and actually got stronger yesterday, so that is a positive development. So no real reason to change our view that we remain within the consolidation of a secular uptrend that's likely to resume to the upside. I think we could see some pause, maybe a little downside in the near term, just given Facebook's earnings, given the fact that we are trading into this resistance level, and given the fact that the RSI has not confirmed. Your market in a minute. PowerFeed TV subscribers. Bullet points that are key for today. S&P 500 continues to advance. It's now less than 1% from its highs. Those small caps underperform again. Facebook's report, as we said, disappointed. Should weigh on the tech sector today. Breadth metrics remain strong. We're going to look at one of the key metrics that I look at every Thursday for Chaikin Analytics subscribers. They receive my morning note, and we talk about the breadth metrics, breadth for Thursdays. Futures point to a slightly lower open. Let's take a look at the power bars for the major indices. The Dow, 7-4 in favor of the bulls. The S&P 500 getting stronger. 97 bullish or very bullish stocks for 69 bearish or very bearish stocks. And that metric has continued to improve throughout the week. NASDAQ going to probably come under some pressure here today from a price standpoint, but it was up 1.4% yesterday. 29 bullish or very bullish stocks for 11 bearish or very bearish stocks. And as we said, the small caps underperformed. S&P 500 up nearly 90 basis points, small caps up 35 basis points. That's some significant outperformance. It's just for the day, but we're going to take a look at that a little bit further, as their power bar, while remaining bullish, did see a bit of deterioration. Some positive commentary on the trade front helps the industrials add 1.5% on the day. That power bar still skewed to the negative side. 10 bullish or very bullish stocks for 15 bearish or very bearish stocks. So based on the power bar, small cap stocks and large cap stocks are somewhat bullish. Major indexes are mixed. So our stock of the day today, speaking of large cap and speaking of technology, our stock of the day for PowerFeed subscribers, Google, ticker symbol GOOGL. Alphabet is the name. it's an internet stock. It falls within software and services. Closed at 1,275 and 94 yesterday, up 1.4%. Has a very bullish power gauge rating due to strong earnings performance, very positive expert activity, and strong price volume activity. That's the technicals portion of the bucket within our model. So as we take a look at the chart here, we can see that we are currently on that very bullish rating. Has a strong trend in a strong industry. The ribbon tells us where the rating has been over the past 12 months. It's been either neutral or bullish, so that's a positive sign. And back in June, really started to outperform the market. So the market is in agreement with our model. I like to call it in gear. We call it the dynamic duo. These are the types of names that you want to own. Very bullish stocks, outperforming the market, with bullish money flow, which Google does have. However, right now the stock is overbought. Strong earnings report earlier this week. Stock gapped higher. It's remaining there. Probably, not one that you want to chase right now, especially given the potential for weakness in the technology sector today on the back of Facebook. You can see our overbought, oversold indicator has moved into a strong overbought condition. So we'll give that some time to digest and play out, but Google is definitely a name investors should be looking at on the long side. Sector tracker over the last 5 days. Here's how the major groups have been moving. Tech has been strong, going to be weak today. Healthcare, strong. Materials and energy, also strong. What's interesting here is that technology and healthcare, every day we look at where the power bars stack up at the sector level when we close out this call. Tech and healthcare have been in the top 4 for the past couple of months. So the fact that they're emerging as leadership is good. Real estate and utilities at the bottom of the list, though, all of them are positive. So that's an encouraging sign for the bulls here overall in the market, but we really want to concentrate on the parts of the market that are outperforming. Financials have been okay, but they're from a power bars perspective, longer term, they are a strong group. And within that, I actually highlight an insurance stock for Chaikin Analytics subscribers today. Industry in focus. This is one we've been talking about, right? I've been open to the idea of REITs bottoming on a relative basis. And over the past 6 months, they've been strong. They've outperformed the S&P 500 by over 5%. And the power bar ratio, which measures future potential, is very strong. With more bullish than bearish stocks, it's currently ranked in the top third at number 7 of 21 subsectors that we moved up. It has moved down 3 slots over the past week, but you can see 33 bullish or very bullish stocks for 8 bearish or very bearish stocks. Some of the indicative names there: Ashford Hospitality, AHT, American Home, AMH, and Retail Properties, RPAI. Let's walk through the process on one of those today. It's Ashford, ticker symbol AHT, closed at $8.04 yesterday, down 62 basis points. So, let's just keep in mind this is a sub $10 stock, but it's really good to illustrate the process. A very bullish stock with a strong trend in a strong industry. It's been outperforming the market since April. The power gauge rating has been bullish or very bullish since that time frame as well, and it's been predominantly so for the past 12 months. So the market is in agreement with our model. Stock is currently oversold based on our overbought, oversold indicator, but it does have really strong Chaikin money flow. So this is an interesting name here. Stock ticks up to 850, kind of consolidating, hitting up against our short-term trend line. It's above the rising long-term trend line. So everything kind of lines up here, in my mind, for an entry on the long side in ticker symbol AHT. If you don't play names under $10, that's fine. You can use this as an illustration of the types of names that we want to own. However, if you don't mind owning these smaller names, this one does look compelling here on the long side, here and now. Ticker symbol AHT. Trending, what moved yesterday in the S&P 500? The gainers were all earnings related. Fleer up nearly 12%. Corning up over 11%. These are both neutrally rated names. However, keep an eye on them. If the trend is starting to go higher, keep an eye on these stocks, because if the power gauge rating turns bullish, these could be emerging leaders, or you could be catching a winner early in the process. HCA, a very bullish stock, up 9%. We like to see that. RHI and WM round out the top 5 here for us, both up about 8% respectively. On the losing side, also earnings related, NOC PNR and GM are the two we'll look at, though, because PNR and GM have bearish power gauge ratings. They're down. We don't want to touch them. We don't want to go bottom fishing. You don't want to, just because a name is down 5%, you may say to yourself, oh, okay, this looks compelling. Maybe I want to take a look at it. No, power gauge rating is still bearish for PNR. Power gauge rating is still bearish for General Motors. Ford had some disappointing numbers as well. Would expect that stock to be under pressure. Autos really being hit by the trade concerns for investors. T and PHM round out the bottom too. So as I said, the Russell 2000 has staged a key reversal on Tuesday, and now it's staged a key reversal on a relative basis, right? It's broken relative support here that we've been highlighting. It is still above the 200-day moving average on a relative basis, so we'll give it the benefit of the doubt from now, and the absolute trend at the bottom here for the IWM does remain up. However, we are going to give it time to find a level. Remember on Monday, we said the potential was there for the IWM to consolidate or potentially roll over. It had an overbought reading based on our overbought, oversold indicator, so we didn't want to chase. And we want to give this time to play out here from a relative basis as well. Look, it's been a good trade for us, right? We've been bullish small caps for pretty much the entire year. On a relative basis, that trade has worked out. It's starting to give some back. We want to give it time to find a level. We're still not chasing it here. Again, and now we talked about Facebook, right? Their earnings disappointed. The stock is trading down about 18%. It's trading through the 200-day moving average this morning as I'm putting this call together. The 200-day moving average is at $181. Could come back into play later in the day, but some of the key levels that I'm looking at here are right around $170. This gap, I'll give it some room to move to the top of this range here, and then back around 155 where we had this big reversal hammer. The low there is likely to be support. You can see, look, obviously this chart does not take into account what's going to happen today, but you can see the stock was overbought based on our 14-period RSI, did have strong Chaikin money flow. Facebook it's an over-owned name, right? It's a good company. But when they are overowned, when there's a lot of momentum in it, if you're not perfect, the stock is going to get hit. That's what happened here today. I think we want to see if Facebook can hold these key levels, ideally above $170. Give it some time to stabilize. I'm not in the business of catching falling knives. This has been a great stock, but we need to give it time to reset here. Breadth remains constructive, as I said. One of the metrics that I look at is the percent of S&P 500 stocks above their respective 200-day moving averages. That metric has moved up to 64%. I look at this weekly. I was obviously out last week. So 2 weeks ago, this metric was, under 60%. We do like to see it over 60%. It's generally associated with positive performance over the next quarter. In fact, over the next quarter of trading for the S&P 500, when this metric is over 60%, the S&P 500 is positive 1 quarter later, 79% of the time, for a median return of 3.36%. So we want to see this metric continue to improve. It's a sign of breadth. It's a sign that individual names are joining the rally. Some of the other breadth metrics that I look at on a weekly basis for our clients are the percentage of names above their 20-day moving average. That's actually moved up and is strong this week. I look at how the equal-weighted S&P 500 is performing relative to the cap-weighted S&P 500. That is actually broken down. It's the one kind of bearish breadth data point that we have here so far. But all the other data points that I look at from a breadth perspective actually do line up. They, so it points to confirmation of our thesis that the market is likely to resume its trend to the upside, but we'll see how it reacts here today. As I said, Facebook is a big name there. I also look at some of the global markets as well, and the U.S. really is doing the heavy lifting. Global markets actually have rolled over. Whether you look at the ACWI ex-US, whether you look at emerging markets, whether you look at frontier markets, those ETFs are all below their 200-day moving average. So that it is something we're keeping an eye on, just given the fact that the U.S. tends to be right now, or seems to be, the best house in the global markets. So looking at the Power bars at the sector level. Utilities continue to be at the top of the list. 10 bullish or very bullish stocks for 1 bearish or very bearish stock. As I said, financials moved up 13-2 here on the ratio, and insurance does actually look compelling. As I said, I highlighted an insurance stock for our clients today. Healthcare and tech round out the top 4. Discretionary staples and real estate at the bottom of the list there. Energy is moving up. That's one that we talked about on Monday. So, happy Thursday, everyone. Get powerful, profitable stock ideas and more. Sign up for PowerFeed at chaikinanalytics.com/PowerFeed TV.